Thank you for tuning in. Let's start today's topics. Amazon and Rivian, originally a small startup, made a deal in 2019 to deliver vans to the e-commerce giant, and Amazon even invested an additional $700 million in Rivian, as the companies enter negotiations to possibly change the exclusivity element of their current agreement. It seems Rivian is feeling the pressure to increase production and reduce costs. As for their stocks, Amazon soared by 2.47% while Rivian dropped 3.39% on March 13, 2023. It looks like Amazon is playing hardball with Rivian, and their stock prices are reflecting the tension. Taking advantage of the situation, are we? Electric vehicle stocks slumped on Monday amid concerns that their traditional sources of capital and funding may be in short supply following the collapse of Silicon Valley Bank. The Federal Reserve's moves to shore up investor confidence have done little to ease the effects of the bank collapse, creating a general risk-off sentiment that has steered investors away from young tech-related startups: Tesla, Rivian Automotive, Lightning Motors, Arrival, Faraday Future, Electromechanica, Mullen Automotive, Re-Automotive, Tritium, Helbiz, Phoenix Motor, Arrow, and Lordstown Motors were among the EV stocks that saw sharp declines in early trading. Skepticism surrounding EV stocks has been further fueled by a downgrade of Tesla from Wolfe Research and reports suggesting Rivian Automotive could be looking to expand its customer base. Investors sure seem to be worried about Silicon Valley Bank and the implications for EV stocks. Who would have thought to heed the warnings of wolves and electric vans? Microsoft announced on Monday the launch of their new virtual machines that use NVIDIA's H100 Tensor Core Plus and Quantum 2 InfiniBand networking, which is capable of creating large-scale infrastructure that fits any artificial intelligence task. The ND H100 V5 VM enables users to work with between 8 and thousands of NVIDIA H100 Plus for language model training. The H100 Plus were unveiled by NVIDIA last March at the GTC Developer Conference. Microsoft shares and NVIDIA stocks fell in early trading on Monday, but Citi rated NVIDIA as one of the most popular chip stocks to own. Even though Microsoft and NVIDIA stocks dropped in early trading on Monday, these virtual machines should still be popular, showing that technology can prevail over stocks. The fallout from Silicon Valley Bank's closure on Friday demonstrated to traders the potential danger of rising interest rates. When interest rates go up, it can make future earnings less valuable, potentially squeezing a company's operating margin and balance sheet. Experts advise investors to deleverage and reduce risks in the current environment, with a preference for stocks like Apple and Microsoft, which have strong balance sheets and profitability and stability. Investors struggling to cope with rising interest rates in the US must be feeling like they're recreating the final scene of Titanic. Live One's Live Zone Daily has been passionate about connecting music fans around the world since its launch in 2018. Now, music fans have an opportunity to find their latest news and updates on the Live Zone Daily page on Snapchat's Discover platform. Live One Live Zone Daily is committed to bringing fans the best content from festivals and concerts from around the world. Who needs live music when you can read about it secondhand? Snap stock has been rallying as the U.S. Congress continues to take action to ban the popular social media video platform TikTok. Other U.S. social media platforms like Meta platforms, Meta, and Pinterest, Pins, have also seen a boost in their stock prices. Most of the growth in Snapchat users is happening outside of the US, with full-year 2022 revenues rising 12% YoY to $4.6 billion from Snap ads and AR ads. In addition, the Restrict Act, a bipartisan bill to restrict or ban technology from adversarial nations, has been unveiled in the U.S. Senate. Looks like it's time for us to start rallying like Snap and banning technologies like TikTok. With the economic uncertainty due to COVID-19 and with reports indicating that parent company Meta Platforms could be considering more job cuts, the company's cost focus has been brought into sharp focus. Its Reality Labs division, which houses the company's hardware and metaverse efforts, is viewed as a necessary expense but is also viewed as a financial strain. Analysts are applauding the company's commitment to efficiency and cost reduction, with RBC Capital Markets estimating that $13 to $14 a share in GAAP earnings is increasingly in play for 2024. Meta must be careful not to cut so much that they cripple their ability to innovate and stay competitive, because the last thing they want is to become a money pit. Ford announced a $3.5 billion investment in February 13 in a battery plant in Marshall, Michigan, that will focus on producing lithium iron phosphate batteries. This move demonstrates the company's commitment to product quality, safety, and ESG practices. Ford's score of 78.5 in Dow Jones Sustainability data highlights its leadership in the automotive industry when it comes to disclosure of practices and policies regarding product quality and safety, while others scramble to adjust to the shift to EVs and the associated risks. Ford's proactive move shows its commitment to prioritizing quality and safety amid the industry's shift to electric vehicles. This is everything for now on the Wall Street Wackiness. See you in another time.